Hey everybody, welcome to your weekend review for the week of Monday, February 13th, 2023. And oh, what a week it was. Monday started off being down 5 basis points in the morning. Treasuries were mostly sideways in the overnight session, which isn't too surprising given last week's big sell-off and looming CPI data coming on Tuesday. The week ahead, we'll have some important data on housing and inflation with the CPI on Tuesday and the producer price index on Thursday. We'll also get housing starts and builder sentiment. Other important data points are retail sales, small business optimism, and leading economic indicators. Loan demand has been falling while lending standards are getting tighter according to the Fed. This is typical for an economy that is poised to enter a recession. Loan demand for residential real estate was weak and standards tightened on HELOCs, credit cards, auto loans, and other consumer debt. The Fed also observed the same phenomenon for commercial and industrial loans as well as commercial real estate, which is actually what they want. They want companies to not be able to borrow money so that it cools down our economy. The Atlanta Fed GDP Now Index sees 2.1% GDP growth in Q1 of 2024, while the street sees it as coming in mildly negative. Reprice risk on the day is moderate. There isn't any data to worry about, but we could see moves ahead of the CPI data. Remember that tomorrow's data could push rates either way. It won't drive us back to new lows we hit earlier this month. The CPI data comes out on Tuesday at 8:30 a.m. Eastern time, so it'll affect the rate sheets before most people even come in. At the end of the day on Monday, we opened up at 100.234. Ended up at 100.482, so a pretty mild day, not a lot of volatility on the market. But there was volatility in the mortgage business. Jay Farner is leaving Rocket Companies as the CEO, so he is ending his 27-year tenure with the firm, ending as a CEO. He's stepping down as the member of the board of directors last week. Bill Emerson will be taking over for Farner, who has also been with the company for about 30 years. Mr. Cooper is buying Roosevelt Management Company in a deal that will bring them an asset management company platform that will allow them to raise capital from institutional investors. Speaking of Mr. Cooper, they also see $1.5 trillion in MSR opportunity in 2023. They continue to be strategic in their acquisitions of MSR assets and a strong capital base. They can take advantage of opportunities created when others are needing to sell. Got a post from our sponsor at WellThatMakesSense.com. So this was from Jocko Willink. It was summarizing a quote from Bill Shakespeare's Julius Caesar, where he said, "Between the acting of a dreadful thing and its first motion, all the interim is like a phantasma or a hideous dream." Well, let's take a look at what that means in real life. So, between the acting of a dreadful thing, so in between the moment when you are waiting to do something that you don't want to do, and the first motion, which is the moment in which you initiate action, all of the interim, so basically the whole time between you realizing you have to do this thing that you don't want to do and actually doing it, is like a phantasma or a hideous dream. It's like an evil specter, an apparition, or a nightmare. So eliminate that gap. Hesitation turns into cowardice. To win, all you have to do is overcome that moment, the waiting, the hesitation. And to do that, all you need to do is go. So go forward and win. So it's basically talking about, and I think this is a great application to when it comes to cold calling. Nobody has a lot of fun doing cold calls, but the big trick is to just pick up the phone and do it and stop thinking about it. Tuesday was the day we were all waiting for, February 14th, which is CPI day. UMBS were down 9 basis points net on the open. 10-year yields were slightly lower on the day and initially reversed higher due to the modest upward revision to last month's core. So with CPI numbers being as mixed as they were and the sheer volume of trading waiting on its report, it's no surprise to see two-way volatility as the morning progresses. And now that it's back into the red early on, like I said, down 9 basis points. The month-over-month core CPI came in at 0.4 and a 0.4 forecast. Is 0.4 previously. The market wanted to see that go down. Year-over-year core CPI came in at 5.6 on a 5.5 forecast, so hotter than expected, but still lower than the 5.7% last month. So the consumer price index rose 0.5% month over month in January, breaking the streak of lower monthly numbers. Excluding food and energy, CPI rose 0.4%. Inflation rose 6.4% on an annual basis. Shelter is the biggest addition to the inflation, and that will fade over time. Federal officials said interest rates may need to move to a higher level than anticipated to ensure inflation continues to fall after fresh data showed. Richmond Fed President Thomas Barkin, speaking on Bloomberg TV on Tuesday, said that if inflation persists at levels well above our target, 6.4% is well above their target, maybe we'll have to do more. Then the Dallas Fed President came in and said we must remain prepared to continue rate increases for a longer period than previously anticipated if such a path is necessary to respond to changes in the economic outlook or to offset any undesired easing of conditions. So basically, the Fed is saying over and over again they are going to keep hiking rates until the inflation is down. They don't care. And as long as jobs stay low, as long as jobs stay full, they're going to keep hiking rates, and the market just needs to accept that. It'll take one of two things for the current rising rate trend to run its course. Either the economic data needs to shift in a compelling way, or the selling needs to take rates back to 2022's highest rates, at which point the market will conclude a compelling economic shift is imminent. Neither option is fun for the mortgage housing market. Today's CPI wasn't as much of a barn burner as the job report 2 weeks ago, but it was high enough to prove the Fed's persistent point regarding stubbornly elevated inflation. Then today we were down 25 basis points at that 100.24, which that's right above that Fibonacci line, or right below that Fibonacci line right there, and it's below the 100-day moving average. So we moved into a very low range with 100.014 as a floor. We also got news that Black Knight is close to selling its Empower LOS in order to gain antitrust approval to merge with Intercontinental Exchange. The antitrust regulators were almost certain to prohibit Encompass and Empower from being under the same roof. Encompass and Empower are the number one and number two loan operating systems, in which it's pretty much a concentrated industry. No mention of who would be the buyer. Also good to keep in mind that same company owns Optimal Blue that probably does a lot of your pricing. We also got a post from our sponsor at Well That Makes Sense, which is the 5th post in our copy about how to write sales copy. So you need to create a slippery slide that will cause people to traffic to your ad through the entire text and on to buying. So read our post at WellThatMakesSense.com to find out how to do that.